Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about the total cryptocurrency market cap and discuss whether or not altcoins or coins that are not Bitcoin are maybe undervalued at the moment. So if you guys like the content, please subscribe to the channel. Go ahead and give the video a thumbs up, turn your notifications on. If you guys want access to these types of charts where I post periodically, if you want to discuss these charts with other people, then come check out my Telegram group, which you can find a link to in the description below. Here it is as well right here. We have almost 3,400 members. Would love to have you join. And I'll also post this chart here in that group if you want to download it. So I look forward to seeing you there. Let's go ahead and jump in. So what we have here basically is, this is the total cryptocurrency market cap is the white line. And, early on it was just Bitcoin, right? Because early on Bitcoin was the only coin that existed. But then as we move forward through time, we have other coins that come into the mix. And, you can see the total cryptocurrency market cap obviously is reflective of more than just Bitcoin. We got to, over 800, or almost a $1 trillion market cap. Not quite, it was around 800 something billion, I believe. But, we've come back down, and currently the market cap is around 251 billion. Now, the reason why I'm saying that potentially altcoins are undervalued is potentially it's dubious, but I want you to follow my thought process here. And actually, this was someone else pointed this out, which was a decent observation. So I'm just going to explore the idea. So the general idea here is that we know if you take this as credence for, say, anything, it being our fair valuation trend line, which is just fit. It's a logarithmic regression equation of 10 raised to the power of a times ln of x minus b. That's all in parentheses. And then I'm minimizing the logarithmic difference between the point and the regression line, the summation of them over all points in time. Then you get this red line, okay? And I think the red line is fairly good at showing you when the market is overvalued versus undervalued. Even in 2019, it was a time where we were overvalued when the price of Bitcoin and the rest of the cryptocurrency asset class went on kind of one of those mini bull runs or mini speculative bubbles, and it felt overvalued for sure at the time. It felt like, okay, this is too soon, especially if you take into account lengthening cycle theory. It seems like we're more likely to have our next speculative bubble where we go above the dashed green line somewhere out in, say, 2023 or so. So how could this be happening so early? Well, if you look back to the last market cycle, we spent a decent amount of time below that fair value fit, below the red line, and currently we're below the red line as well. Also, historically speaking, a negative 60% undervaluation is basically corresponding to the lower dashed green line. And you can see that anytime we're at negative 60%, when we're near this dashed green line, it's historically a really good time to buy because usually we bounce off of that. And you can see most recently we bounced off of it. This green line is not exactly negative 60. I think it's a little bit more than that. But the whole premise, right, that I've been pushing for a while now is that 2019, so starting from here, and 2020 are accumulation years. And more or less, I think that will be proved to be the case. I think if you look throughout the whole time, the 2 years between 2019 and then the end of 2020, we're going to spend a majority of our time below the fair value line. And one of the things I wanted to point out, though, is you can see that currently we're undervalued by about 40%. So the total cryptocurrency market cap is around 251 billion. Our fair value fit says that it should be around 415 billion. Now, we could go a couple more years before we get back to our fair valuation. I mean, you can see, again, it took us from when we went below during the last market cycle at the beginning of 2015. It took us all the way until maybe halfway, not quite halfway through 2017 to get back above it. So we're talking about 2.5 years. If you don't include this, temporary peak above it, we've currently, if you say we went under it, say the end of 2018, then to get to 2.5 years, we're talking about in 2021, it might be 2021 before we really pop back above it again. But this is the thinking in terms of why altcoins may be undervalued right now. So if you notice, again, our fit here shows that the total cryptocurrency market cap is undervalued. I just want to show you guys this line here just for completeness. So this is just the percent difference between the price and the primary regression line. You can see, we have our peaks that are taking longer and longer to get to. And this is why ultimately I think if you were to extend this line out to say 2023, it's going to be about 300 or 400% overvalued. And at the time, the fair valuation might be, 2 or 3 trillion. So then if you imagine a 3 or 400% overvaluation, it gets us to that $10 trillion market cap for the entire asset class. Clearly, that could be plus or minus a few trillion. Again, what's a few trillion among friends? Let's go ahead and look at let's follow this thought a little bit further. So let's go here. So first I want to pull up this. So if you're not familiar, I do have a few websites. One of them is called intothecryptocharts.com. So intothecryptocharts.com. There's 4 charts on here. The only one that's not currently updated live is this one, so I'll try to see if I can get that fixed. Everything else is updated live, but the one I want to draw your attention to is this chart. So this is the non-bubble logarithmic regression. So this is of Bitcoin. So we took the prices that we considered in a that were not part of a bubble, and we fit those to a logarithmic regression equation. And you can see that actually, it does a really good job of predicting what Bitcoin will be at the halving. And I made this equation back over here when I fit it, and it still predicted the fair valuation of Bitcoin down to a few $100s. So I thought that was pretty remarkable. Now, the thesis is, well, if Bitcoin is currently valued fairly, let's say the fair valuation of Bitcoin is around 80, like between around $8,300 to $8,400. Let's say that's our fair valuation. You can see that we maintained our stance in the fair valuation during the last market cycle for a couple years again, and it was within this green regression band, our fair value regression band, that we basically got to our previous all-time high. So again, if we were to do that here, our fair value might not of $20,000 would not happen until say the end of 2021 or beginning of 2022. So this is why people say, I've gotten a lot of questions, why do you think it's going to take that long? This is why. I think we need to move up our primary regression band, our fair value regression band, to get to $20,000. Clearly, we could go there sooner, but I think if we get there sooner, it will likely not be sustainable, just like the 14K was not sustainable in 2019. What I would like to see is just we continue in this band for the next 12 to 18 months, and then we get to a sustainable $20,000, and then things start to pick up throughout 2022, and then by 2023, we have the peak of the speculative bubble. Now again, if Bitcoin is currently fairly valued, but our total cryptocurrency market cap is undervalued, then wouldn't that mean that other coins like Ethereum and then altcoins, I don't really consider Ethereum an altcoin, wouldn't it follow that Ethereum and perhaps some altcoins are undervalued? And we're going to look at some of these charts in a second. I will remind you that if you guys like the data science approach that I take to cryptocurrency and want access to the premium list, check out my website at intothecryptoverse.com. You'll get access to a weekly report, and it contains just a lot of numbers, a lot of discussion about what the numbers mean. For instance, recently we looked at the best days to buy Bitcoin and Ethereum. The last report we looked at on average what hours tend to be better than others based on just looking at hourly movements over the last several years. So each week we have a different special topic that's usually kind of discussed between the community, and then I look into it, and then I present it to everyone, and then we look forward to the one the next week. In addition to the weekly report, you also get a premium video to accompany said report, because not everyone wants to read a 5-page report single-spaced with 15 charts, so instead I provide a video as well. And then in addition to all that, you get access to a Google Sheets dashboard which will give you the live updated risk levels as well as a few other things. So if you want to join the premium list, feel free to do so. Check out my website, intothecryptoverse.com. Now, let's look at some of the charts. Remember, let's first look at Bitcoin. One of the things we've talked about before is that when Bitcoin is above the 20-week moving average, other coins tend to perform better. So like altcoins tend to perform better, Ethereum tends to perform better. They don't always necessarily perform better with respect to Bitcoin, but they tend to perform better with respect to fiat. And if Bitcoin can hold the 20-week moving average, then coins like Ethereum tend to do very well. So, Bitcoin is currently holding the 50-week moving average at the time of this video. The 20-week moving average is at around 8,200. So in the last market cycle, we had to hold this move. We had to hold the 20-week for a few months, and then we saw like a little bubble above it, and then we came back down, and this happened several times leading into our speculative bubble. Well, ever since we got above the 20-week, and Bitcoin has maintained itself above the 20-week, some other coins have started to move. So you can look at Ethereum. At first, Ethereum was bleeding with respect to Bitcoin. We've said that when Bitcoin crosses the 20-week, you usually want to ride that train. But you can see that Ethereum with respect to Bitcoin has recently been going up. It's been showing strength. Additionally, we can look at Cardano, so ADA. It recently has been showing strength with respect to Bitcoin. Another one, Chainlink. This is, this trend line I drew a long time ago, and it seems like we keep holding support on it. But again, it has been recently showing strength with respect to Bitcoin and also with respect to fiat over the last couple months or so. So this begs the question, right, that if Bitcoin can stay above the 20-week, this is our critical level. So we need Bitcoin to stay above $8,200. Obviously, the 20-week is subject to change. As each day passes, it will slowly change. It's right now it's 8,200. Maybe in next week it could be 8,300, 8,400. I don't really know exactly what it'll be, but the point is you want to follow the 20-week moving average, which you can see here is the blue line, and it's currently at least on the BLX, it's currently 81.54. So if Bitcoin can hold the 20-week moving average over the next several months, then I would anticipate altcoins and Ethereum, I would anticipate these other coins to really start to make moves. Now, the counterpoint is also true, and I'm sure many people are tired of hearing me say it, but if Bitcoin falls below the 20-week, then these other coins that are starting to generate confidence against fiat, they're starting to generate confidence against Bitcoin, they're gonna start going down in the short term, most likely. Now, Chainlink has obviously been one of those that has performed better than Bitcoin over the last 2 years. So there's always some that you can look to and say, okay, well, this thesis is good for most coins, but not everyone. I would agree. If you want to cherry pick a few ones, I'm sure you'll find ones that'll go against the trend, at least historically. But for the most part, most coins that are doing well, it's when Bitcoin is above the 20-week, and when they're not doing well, it's because Bitcoin's below the 20-week moving average. So just look back again to here. It looks like the total cryptocurrency market cap is undervalued according to this analysis, which again is somewhat dubious, depends on how much you accept it. And I also think it's possible that we continue marching along for the next couple years, but even if we don't come above the fair valuation line, this is still monotonically increasing. So to stay within this band, we more or less have to continue to steadily go up. And my argument is that, I do think Bitcoin is certainly the majority of my portfolio. It always has been and always will be. But I do leave room for other coins, especially when Bitcoin is above the 20-week moving average. And then also when Bitcoin gets, say, to its prior all-time high of $20,000, then I think some other coins could really start moving as well. And then additionally, at the end of the bull run, that might take place a few years from now. So I hope this is informative to everyone. If you guys like the content, if you want to download maybe this chart, then come join the Telegram group. You can see the link to it right here, which you can also find in the description below. If you want to join the premium list, I would love to have you. There's a lot of perks. If you want to get a discount on the premium list, you can pay with cryptocurrency. Just check that out on the website. You'll get a discount, which is pretty nice. And that'll wrap it up for this video. I hope you guys enjoyed it, and I will talk to you next time. Bye.